Welcome to the X Factor Real Estate Podcast, where we are simplifying the world of real estate one podcast at a time. I'm your host, Terry Hudson. Let's get into it. Thanks for being here, you guys. Thanks for listening. I am Terry Hudson, principal broker of X Factor Real Estate, and I just wanted to introduce my guests here from Cypress Credit Union. Jake, you want to start?
Yeah. Hi, Terry. How are you?
Amazing.
Good.
How are you?
My name is Jake Hinska. I'm the sales manager for Cypress Credit Union. Next to me is Anna. Anna, do you want to tell us a little bit about yourself?
Yeah, I am one of Jake's mortgage loan officers, one of his peasants. I bow down to him. No, I've been with Cypress Credit Union for almost 18 years now.
Been in the game for a minute.
Yeah, I know. I only look 18. So.
Right. We're just so young.
Yeah. My favorite are working with first-time home buyers. So
Awesome.
Yeah.
Well, thank you for being here. Jeremiah?
Yeah, so my name's Jeremiah. I'm been in the industry now almost 20 years. Well, actually 20 years this year.
Isn't it wild? I know. I feel so old.
Yeah, it catches up to you. But yeah, I'm under Jake, and I work with Anna, and we love working with first-time home buyers, and it's just amazing.
Yes,
Partnering
and
with
I've
Terry
worked with
here.
all of you, and I I love working with you guys. You guys are awesome. You make the process really smooth. And so that's why I asked you guys to come on, because I feel like not only do you have a lot of knowledge in the industry because you've been in it for quite a while. I won't say a long time just because, how are any of us aging, but no, but because I've worked with you and I've had a lot of successful transactions, and specifically with first-time home buyers. So the point of the podcast is to simplify real estate for consumers, for the public. Obviously, real estate is very complicated and can be overwhelming for people. And I feel like specifically first-time home buyers just have so much information. We live in a world of information, right? Where on the internet they can get access to anything, but that doesn't mean that they understand it, right?
Right.
So I wanted to, have a conversation where it was spelled out for them, not only the process, but also what's available to them, because there's quite a bit that's available specifically for first-time home buyers that other people who are buying homes, after their first home, they don't have access to those programs and incentives. So, so why don't we start out with that actually, and kind of talk about, actually, no, I lied. Let's actually talk about, kind of what we were talking about before we started recording of first-time home buyers and what kind of comes along with that, right? Because for me, it's nerves, right? A lot of them.
A lot of nerves.
Yeah.
I think obviously they're getting everything thrown at them, like you said earlier, right? It's a big world of unknowing for them. And it's giving them actually what's going to happen during this process at this point of, like we were saying earlier, there's no such thing as a dumb question. And I think sometimes they're nervous to ask those questions.
Yeah.
And it's please do at this point of, I would love to tell you probably way too much in length at this point that you don't care.
Yeah.
But I'd rather what's out there at this point.
Right.
So, when you are going and shopping and everything, what this can affect.
Right.
Yeah.
I feel like one of the biggest moves for a first-time homebuyer is getting them to us, to you,
Yeah.
Terry, as a real estate agent, or us as a mortgage loan officer to get them pre-approved. I feel like it takes a lot for them to get there. So I think assuring them in the beginning that, hey, it's okay if this process might take 6 months or 12 months. We're going to give you a plan, whether you're there or not. We're going to give you a plan to get where you need to be.
Yeah.
So I always assure, first-time home buyers, if you're not there today, we'll find you a plan to get you where you need to be, or at least you'll have the knowledge, because that's where I feel like, hey, have you gotten pre-approved yet? And a first-time home buyer's they're scared. They're scared to come ask.
Or half the time they don't even know what
They
that
don't even-
means,
what that means.
Yeah.
right?
Right.
What does
Right.
pre-approved mean? Yeah.
Mm-hmm.
So I think, talking through that process, but you're right, even getting them to the point where they're willing to talk to a realtor or willing to talk to a loan officer, they're like, I'm not there yet. Right.
Right.
And I think a lot of the reasons why they're not there yet is because they have a lot of noise in their head from homeowners, a lot of times their parents or
I was
grandparents,
just going to say that.
right? So
Yeah, I think there's a lot of it of, especially in Utah. I mean, it's not cheap to live here by any sense of the word anymore.
Right.
And I think a lot of them sit there and say, well, my mom and dad said it was hard for them, and it was, that was 20 years ago or whatever it may be to go buy a home, and now you're asking me to do it at a $600,000 price point or whatever it may be. But
right when their parents bought one at $59,000.
we were literally talking about this. My parents bought their first house for $35,000. I was like, that is ridiculous, and I wish you wouldn't have told me
now
that.
you
'cause
can't
now
get a
I'm
car
angry.
for $35,000, right?
But I think it's a lot of that of them saying, well, basically everyone's told me I can't qualify. And it's actually to your point of opening that door of like, well, tell me why you can't qualify.
Yeah.
Right.
Is it something that you've actually had a conversation about, or is it something you've just heard?
Right.
And because to your point, there's actually, you probably can, or if you can't today, let me help you get on a plan how you can
Yeah,
qualify.
so that in the next year you could actually, like a year can make a huge difference financially for someone. Even 6 months can make a big difference for somebody. Also, I think the other noise that's in their head is not only the purchase price of the house comparatively to their parents or grandparents, but their parents saying, "Oh my gosh, I can't believe that you would pay 7% interest."
Yes.
Right? Or better yet, at that point, not even their parents saying that, because their parents have had experience in higher interest rates for sure, but their friends or siblings that are older that got in at the COVID rate.
Yes.
Right. And so they've refinanced at a 2.75 or a 3% interest rate. And they think like, well, you should wait until interest rates come down. And there's so many reasons why you should not wait until interest rates come down. So I want that to be all part of that conversation today so that we can kind of reassure them, also give them all the information straight from the horse's mouth, if you will. Right. So we're in that every day, right, with first-time home buyers. And I know that I teach a first-time home buyer class and have had Jeremiah teach that class with me, where we just are giving all that information. And so we can kind of talk about all of that, today. But let's start by that conversation initially of what a first-time home buyer would need in order to get qualified to get a home loan. So let's just hypothetically say, they've come to me and said, "Hey, Terry, I'm thinking about buying a home." My immediate thing that I do is I say, "Great, let me put you in touch with some lenders so that they can have that conversation with you and we can kind of see what your buying power is and where you're at financially right now," right? Because there's no point in me going house shopping with anybody when we have no idea what that purchase power is, and everybody is different. So what would that be if somebody came in, I send them to you, and they are trying to get pre-approved? What's that process, and what are you looking for in info?
Right.
Typically, so when we sit down with our first-time home buyers, we look at income, credit, time of employment, right? So typically we look for that 2-year time frame. And as a first-time home buyer, believe it or not, you're considered a first-time home buyer after 3 years of not owning a
Dun,
property.
dun, dun.
So,
Which is amazing, and a lot of people don't know that, right? They think
People
like,
don't know
well,
that.
I owned a home with my former spouse or my brother or my cousin, but we sold it 5 years ago. So now they would qualify under that umbrella of first-time home buyers.
Yep. So, which is amazing because we have these opportunities to where, we can get them in with zero down. There's a couple of different options with.
Which is amazing.
And so, and it used to be where you always had to have that stigma down payment, right? But now with these programs, we can make it happen with no money down.
Yeah, which is incredible. And how many people are like, I don't have 20% down? Well, you don't need 20% down. I mean, what percentage, this is obviously you just pulling this number out of your hat, but what percentage of loans that you guys close for people, first time buyers, investors, anybody, upgrading homes, how many people do you think actually now put 20% down? What do you think, ballpark?
You see how they both look at me?
I was going to say,
I would say, looking at it, probably only like 20, literally probably close to 20%, 20, 30%. Most
20,
do not.
30% of buyers.
And that's because those people have homes to sell
yeah.
and they've got that money, the equity from the money.
And they're rolling it
They're
over.
rolling it over.
Yep, exactly. Not because they saved it up or anything. Well, some people,
Right.
maybe like 5% of people.
Yeah.
Yeah.
But the others, literally, it's equity coming from the sale of another home that they own. So it's not a first-time home buyer. I'd say first-time home buyers for sure. Maybe like less than 5% of first-time home buyers have 20% saved up.
Yeah.
I would say.
Yeah.
Unless parents are helping them or doing
Yeah.
Unless they're
Gifts.
they're getting
Something.
gifts or
Which
yep.
is something I think that's another point to bring up. I think we've seen more gifts than we've ever seen of, family members. Hey, grandma and grandpa, instead of waiting till they are deceased to give whatever inheritance away, they're giving it now.
Right.
Of saying, hey,
help them get
I
into a
actually,
home.
and I want to watch you actually enjoy this now rather
Yeah.
than waiting,
Right.
till we can't, none of us can enjoy it anymore.
Right.
But that's okay if you don't have, gifters or donors.
Right.
I feel
Yeah.
like there's first-time homebuyers out there that are thinking, listen, I don't have a grandma or parent to gift me funds. Like that's okay. We
Yeah.
have programs. There's programs out there for you to do zero down, to do grants, to
Yeah.
do so. Just don't be overwhelmed or feel defeated because you don't have money saved up. There's options for you too.
Yeah.
Yeah. Okay. So whether they have cash in their bank account is part of the pre-approval.
Right.
Right. And why is that? If they don't need any money down, why would we need to have money in their bank account? Right. Because that's part of the conversation also.
Right. And sometimes, it helps. Like, for example, if we have to get a little bit higher debt to income ratio, having those reserves, sometimes we can get in higher approval. It does help with the reserve process. Like with our program that we have specific, we do require 2 months reserves.
2 months of mortgage payment reserves.
So principal and interest, taxes and insurance.
So if your payment's $3,000, you want to have $6,000 either in a savings, or it doesn't have to be something liquid. It could be totally something like in a 401k or an investment account, or it could be gifted. That can also be gifted as well.
Okay. So 2 months of reserves or more.
That's always a good number to keep saved up.
And you want to have some consistency with employment, right? You don't want to have multiple job changes over and over again. So we try to find some consistency with employment and at least be on your job for 6 months.
I feel like first-time homebuyers like to ask me, I'm about to change jobs right now, and they get scared of that. But I'm like, hey, if you're changing jobs because you're going to be making more money, or if you're in the same line of work, like that's totally fine. It's a benefit to you. They definitely feel like they don't want to move jobs because they're trying to buy a house.
Right.
It's like, no.
But same industry essentially transfers over, right?
Yep.
In the case of them being a W-2 employee.
Correct.
Right. So super important for them to realize like there's a lot of people who have decided to be entrepreneurial and open their own business, which is incredible. I own my own business, right? And I am thrilled about it. And also I know that changes things for me tax-wise. I can't do anything, even if I were making millions and millions of dollars a year, if I don't have those 2 years of tax returns for my new business, right? Then I can't count that income towards approval. Is that true?
Correct.
Okay. Yeah.
It's a 2-year rule. I would say. 2
And it
years.
works the same. I mean, if you're, commission based, same thing. Even if you are W-2'd and you're making commissions, you've got to have that 2-year history.
So like a door-to-door sales, are they 1099? It probably depends on the company.
I think it
Some of them are-
depends. Yeah.
Some of them are 1099 and
If you
some of them,
go-
but they make a lot of money, can't necessarily get approved until after they hit that 2-year mark.
Correct.
Right.
Yep. So, for example, if they went hourly and then got promoted to commissions, then we'd have to wait that 2-year mark. Even though they've been with the current employer for 2 years, we still have to have that 2-year commission employment.
Okay.
And as a first-time home buyer, if you are self-employed, I feel like a huge thing is like Tara's saying, you can make millions and millions of dollars, but it's really what you report to the IRS,
Yep.
right? So, unfortunately, you can't have your cake and eat it too. Catch 22,
And that's
right?
the game, right?
Right.
Yeah.
So
Find a happy medium.
Right, right.
Yeah.
You'll have to pay some taxes to report some income so you can qualify. But we're here to help you figure out what that amount probably should be for what you want to qualify for.
Yeah. And I mean, I tell people CPAs and loan officers want opposite things for their clients, right? And so a CPA's job really is to make it so that you are taking advantage of the different tax breaks and credits and all write-offs and all those things, right? but then those things bring your income down on what you're reporting for taxes.
Yep.
And then on the loan officer side,
I want you to pay taxes.
Yep.
we want you to
want you to
pay
pay taxes.
so that we want you to show income.
Yeah.
We don't personally, but Uncle Sam.
Yeah.
Yeah. But so it is a fine line. I've had loan officers jump on calls with my CPA
Yep.
prior to me filing taxes, and my CPA will say, "Are you trying to qualify for anything this year? Are you trying to buy real estate
Yes.
this year?
Right.
If so, let's figure out how they want that to show up, right? And there's certain things that they can add back in, right?
Correct,
Depreciate.
yeah.
Yeah.
Yeah, because that's something like, especially when I work with self-employed borrowers, that I always bring up of, hey, have that conversation with your CPA of, I need to qualify for a loan. So
Yeah.
we're going to have to show more income.
So
this
please
year.
don't show that I lost money instead of made money.
Next
Yeah.
year.
Yeah. Okay, so the myth of down payment, right? But we need reserves. That your employment history.
Yep.
What else?
Credit. So credit's a big one.
Credit score.
Yep. So we need for the Cypress program that we offer, we look for a minimum credit score of 675, I believe.
675 credit score.
Yep.
Okay, and the credit score that you look at is not what necessarily shows up on their like credit
wow.
Credit
watch,
Karma.
right? Their credit
What?
card, right? Is that right?
That is true.
Is that right?
Yeah.
Right.
Because there's a lot of people who are like, "This is my credit score," but then
Yeah.
when you pull it, it's
something
it's
different.
different,
It could
and
be
it's shocking
more
to them.
Right. It could be way more. It could be less. The credit score that shows up on your apps are more for consumer loans,
Yeah.
like your credit cards, your auto loans. But we have like a mortgage score, so it's something different. So don't be surprised if it's not the same as your Credit Karma is telling you. I always tell people that when we're about to pull credit, but we do pull all three bureaus, and we usually go off the middle of the three.
Okay. Okay, so 675 and above. Ideally, what's the top that you would look at? 740 and above. Yes? For the best rate.
For premium pricing, yes, best rate if you're going to be above a 740.
Okay.
And if you're under a 675, don't be
okay.
defeated.
There's
It's
still
okay.
other options.
Well, there's
There's still-
other
yeah,
options,
a
and we
lot
can
of
get you
options.
where you need to be as well. That's why we like to,
See the
Have
big
the
picture.
conversation.
have the conversation for sure.
Yep. So we can see exactly what they're working with.
And that 675 is for that 0% down first time
Cypress.
home buyer, right?
Yep.
Loan. Cypress 100 is what you call it.
Correct.
Yeah. So other options still exist. You just might be riskier, right, to the loan.
Mhm. Paying a little
Paying
more,
the-
in
yeah,
rate
so-
or
So you're going to put a
payment.
little bit more down or something like that, right? Higher interest rate. It's up a tick because your credit score is lower.
Yeah, we like to compare our Cypress 100 closely to like a Utah Housing, which Utah Housing, they don't require, well, they help you with an assistant down payment because you have to have the 3.5% down, but then they'll give you a loan they'll give you an assistance for that, but the rate is a lot higher. So a lot of information, but I compared the two because it's both zero down. Like you're not having to bring in money to the table type thing essentially. So, I mean, our payment typically on our Cypress 100 is about, I always look at it like $150 to $200 difference in payment because our program doesn't have mortgage insurance,
PMI.
no PMI, which, Utah Housing, it's a government program. You have to have upfront mortgage insurance and monthly mortgage
Which a lot of first time home buyers, they have no idea what mortgage insurance even is,
Right,
right? So
right.
that magic number of the 20% down payment, the reason why in the past people tried to do that was because they were trying to avoid that extra cost every month on top of your mortgage for mortgage insurance, which is a backup insurance premium essentially for the lender to say, hey, if this buyer walks and stops paying, at least I have a little bit of protection, right, from that mortgage insurance. And that mortgage insurance goes away typically when you have 20% equity in your home, whether the equity has, bumped up, right, the over appreciation, or because you have 20% down up front, right? And so now they're structuring loans where your Cypress 100, for example, where there is no mortgage insurance for the life of the loan. It's a fixed mortgage.
Fixed.
It's not variable. It's a 30-year loan, right?
Yep.
And no mortgage insurance, which is incredible that they don't have mortgage insurance and there's no down payment required.
Right.
So, so good. And why are you guys able to offer that for first-time homebuyers?
Well, I think it's something we saw in the marketplace, obviously, of this whole conversation, right? Of people, it's kind of really an unrealistic expectation to have 20 down anymore. So,
Yeah.
we obviously, as a lender, we have things behind the scenes to make sure that we're protected, but we really want to make sure we're doing right by our membership of, you know, an offering of making sure they're taken care of like, there's ways to get you in a house at this point. We don't need to. If you can show me you can make a payment at this point, let's do it.
Right.
We're here to make sure, you know, it's culturing what we want at that point. So
Right.
we've kind of just done it for that of, hey, we saw a need, let's do it.
Yeah.
We are a credit union, so we don't have to follow specifically, you know, Fannie and Freddie guidelines. So we are able to make programs like the Cypress 100 where a mortgage broker has to follow, you know, these Fannie Mae or Freddie Mac guidelines, where we actually could look at loans outside of the box. We can, you know, and help those members or those borrowers that like you said, like we have a need for them. And so luckily, you know, we're a credit union.
Credit union, so we got a little bit more flexibility.
And you service the loans yourself, right?
Yeah.
For that first-time homebuyer loan.
Yep.
Yeah.
Right? And so a lot of mortgage companies sell off that mortgage, right? And so people all the time are getting a letter like, we've sold your loan to X bank, or this is now you're making your payments to this person instead. And you're like, in the 30 years that somebody, I mean, most people don't stay in their home 30 years anymore, but over the course of that 30-year loan, I mean, it could change hands a dozen
Who knows?
times,
Yeah.
right?
Yeah, you could be making your payment locally here
Yes.
at Cypress.
But because you guys service your first-time homebuyer loans in that program yourself, then it's something that you feel like you can say, okay, we're not going to charge mortgage insurance for this because we've vetted our member. We've made it so that we feel confident about them as a first-time homebuyer, and you know we're willing to back them up and fund it.
Yep.
Which I think is incredible. Okay, so the next one that I know is a huge concern for first-time homebuyers is debt. So student loans, credit cards, car payments are a huge one. Car payments are huge. I'm shocked at how many young
$1,500 car
people have
Yes.
really nice cars.
I know. I was
you
like, man, I didn't grow up in that.
Yeah, no, I didn't either. Yeah.
But the thing is, there's that debt out there.
Yeah.
There's
Yeah.
tons of debt out there, and we can look at it. I like to, when I sit down with a first-time home buyer, I ask them, like, here, list out your debts with me. And what are the monthly payments? Because the monthly debt obligation is what counts, right?
That
And
goes
so-
towards what people refer to as DTI,
Yep,
right?
Debt to income ratio. Yes. So, I mean, if they're telling us that there's $1,000 payment, we could definitely get creative and maybe refinance, because we are a local credit union. We can also do that in-house and say, let's refinance your truck payment. That's $1,000. And we can probably stretch it out to maybe, you know, an 84-month term and maybe get a $600 payment. So
Instead of
we could
$1,000.
do things to offset, you know, like let's get you qualified for more of a mortgage payment and then less of your, you know, truck payment.
And I can't tell you how many times we do that.
Yep.
I bet you it's
Yeah.
1 out of every 5.
Yep.
Really?
Yeah.
Yep.
That's the joys of being at the credit union. Is
Yeah.
I can get on the phone and say, hey, we need to restructure this auto,
Yep.
do this, and keep it simple.
That's fascinating.
Yeah.
Student loan is also a huge
Yes,
debt.
big one.
So how does that work for a student loan when someone has X amount of tens of thousands of dollars, but it's deferred? Remember, like they don't have to pay it until whatever. How do you look at that?
still
We have to
hit-
look at it.
Yeah, we still have to hit 'em with the payment. Typically, depending on if we're going Fannie Mae, it's usually 1% of the outstanding balance. Or if it's Freddie Mac, we can hit them with 0.5%.
Right.
So 9 times out of 10, if I see student loans, I'm usually going Freddie.
First time home buyers like, wait, but it's deferred. You don't have to hit me with that payment. I'm like,
But we do.
But unfortunately, we're giving you
We're
a
assuming
30-year
Yeah.
30-year mortgage.
You're
I'm
gonna pay
pretty
it
sure you're
back.
gonna have to pay that back.
You're gonna have to pay it back at some point while you're also paying.
I mean,
for
I
the
heard
house.
that they were getting fully forgiven at some point, but But that's the thing, people are waiting for that to happen. And so because of that, they're not making payments because it's deferred. And then they need to realize that unfortunately that's going to hit your debt to income ratio. But there are things out there. Like, I don't know if you guys have heard of like an income driven repayment plan that, you know, student loan companies will offer, like let them apply for it, and depending on your income, they might have to pay zero, depending on what this letter says, depending on how much
They'll
they
reduce
make.
that.
Yeah.
So there's a lot of options, you know, when it comes to student loans. It like Jeremiah said, 1% or 0.5%, or maybe we don't even have to hit them at Hall if they can get this income driven repayment plan letter.
Okay.
You know, so there's a lot, definitely a lot of debt.
Yeah. And what's that ratio that you guys like to stay under for your first-time home buyers?
Typically, it's 45%.
45% of the income that they make.
Yep, gross monthly income versus their monthly debts.
Okay, so let's just, for sake of numbers, see what we can do easy in our head. Let's say gross income monthly for someone is $6,000 gross. Should we bump that up? Do we need to bump that up? Let's say 8. Okay. Let's say 8. Okay. Let's say 8,000, or combined, right? If you're buying it with a significant other or a sibling or whatever, that income is combined, right? So let's say $8,000 a month. So what is that amount that it can be? Let's see, 50% would be $4,000.
I'm going to say probably right around that 35.
Okay, so 35. And that debt to income amount is cumulative for the mortgage payment,
The proposed mortgage payment.
proposed mortgage
Plus-
payment, property taxes, insurance. So all that lumped in payment, right? Which is principal, interest, tax, and insurance, homeowners insurance. And then what else? Credit card
Credit
monthly.
card,
Credit card
debts.
monthly,
car loans,
car
student
loans.
Yep.
Okay, but not utilities, not gym
Cell
memberships,
phones.
cell phones, not all of
Just
those.
anything
like,
that's reporting to credit.
which is why they want it to be under that certain ratio of, did you
Right.
say 45%?
45.
Yep.
So
So
45%.
45% of 8,000 would be $3,600 a month. So I always
Oh,
tell
listen, see, she's good at head math.
I'm like,
Or I
can we
have
do
a good
10,000 to make it easy.
calculator.
I know, but the reason I wasn't originally thinking 10,000, but then I thought if I were listening to this and I was like, oh my gosh, I have to make $10,000 a month in Utah in order to afford to buy a home. So I just was thinking, let's not overwhelm them. Can we dumb that
Keep it
number
simple.
down? Yeah.
That's fine. 8,000. I'll do the math.
Okay, so 36. Good job, Asian. Okay, so 30.
45% of 8,000 would be 3,600. So I say all of your monthly debt obligations, including your proposed mortgage payment, has to stay under 3,600 to qualify. So let's get you there. And then let's say their monthly debt obligations right now are $600. So that means they can qualify for a mortgage payment of 3,000.
Did you have to use your calculator for that?
I'm not going to say my calculator in my brain.
Right. Okay. So that kind of rolls into. So is that typically what you're looking at, right? When you're
Right. Yep.
qualifying, those are the
Yeah, I mean,
bullet points.
it breaks it down to that point. And then also, too, like, you know, when you start this process, one thing to keep in mind when it comes to debts, no new debts. So once
No
we start the process, please.
Oh my gosh.
No new cars, no new credit cards. Don't run to RC Willie's.
No question is a dumb question. So if you're like, should I buy this? Like, let's go ask my loan officer real fast.
Absolutely. Or your agent, right?
Yes,
Like,
right.
I do get questions and say, okay, Terry, I'm at RC Willie and they'll let me lay this away, right? And I can put this on a 0%
0%.
interest. I don't have to start paying it for 12 months, but then that way I can secure all the furniture for my new home that I'm going to be buying. No, that's a hard pass. Like, no. It's really, really important that they don't open any new accounts. Every time I go, it doesn't matter if I'm at TJ Maxx, Ulta, Target, everyone's like, would you like to save 15% on your order today by getting a credit card? And there's so many people that are like, yes,
Yeah.
listen, I would like to save 15 or 20% today. That would be amazing. No, actually, because it will kick you out of buying a home.
If not kick you out, it will at least cause you a headache. I've got one right now that had the exact same thing happen, and there's documentation that we have to gather.
Yeah.
So it can delay the process.
Hiccups for sure
Yes.
in the process.
I want to be your friend at the end of this. Like,
Please,
Yeah.
yeah, I don't
Not the
want
bearer
you
of bad
hating me by the time we're done. So
Yeah,
please
not the
just
bearer of
wait.
bad news. Okay, so those things are what you're asking for. So let's go back to that $3,600 a month. Thank you for that math, Anna. Let's go back to that $3,600 a month. So now the conversation goes into what can they afford in this market with these interest rates for $3,000 a month, right? So then the conversation is I should wait until interest rates come down in order to buy a home. There's so many reasons why you should buy now if you can instead of waiting until later. And from a realtor's perspective, I try to have this conversation very frankly with my clients and tell them, here's what happened in my experience as a realtor with my clients when interest rates were 3%, 4%, right? It was a buyer frenzy.
yes.
Buyer frenzy. You're getting 10, 20, 40 offers on a home and one person is winning. So what ends up happening? The price of that home goes up between when they list it and when it goes under contract. I mean, sometimes during those COVID times, you've got a house that is going 25, 50, 100 grand over list price. It's not appraising for that.
Nope.
People are paying extra money because it's above appraised value. You're overpaying for the house. But why would buyers be willing to do that? I asked myself, why are they willing to pay over appraised value? And the answer that I came up with was buyers typically, not all, most in my experience, don't care about the price of the house. They care just about the monthly payment.
Right.
So they
Absolutely.
didn't care that they were overpaying for the house. In the long term, they just care that they can make this
Payment.
cheaper payment. And they were getting outbid by everybody else who was in a position of paying over that appraised value. So when interest rates come down, those prices go up, and your chance of getting in a low inventory state, which Utah is, your chance of getting in is so much smaller.
Right.
And in those 10, 20, 40 offers, you're not getting seller paid closing costs
Nope.
to buy your interest rate down, which you are now able to get that in a lot of cases. You're not getting a credit for repairs that have been deferred maintenance problems by the seller, right? And you're like, hey, we need a new roof, and the water heater is 27 years old and you know it's leaking and all these things, right? When typically a water heater lasts 10 years, right? And we're like, this thing's gonna explode any
Yeah,
second,
any
but
minute.
you can't ask.
Yep,
You
you
can't
can't.
because
You
it's a
gotta-
seller's market, and it's not a seller's market now. And so because there are less qualified buyers that are willing to pull the trigger and buy, you can ask for seller paid closing costs. So what are you doing with those seller paid closing costs as a loan officer? What are you able to do when I, as an agent, can go in and negotiate for that on behalf of my clients? We structure the offer so that we're asking for that, right? Here's our purchase price offer, Mr. and Mrs. Seller. And we're also going to ask the seller to contribute 5, 10, 20,000, whatever that cap is that I can ask for and negotiate for. When we go under contract, I'm going to negotiate for that. And then what do you guys do with that seller credit a lot of times?
So I can tell you about a recent experience that I had for some members, right? And I was pretty happy about this. This was truly amazing. It really was. It doesn't happen like this all the time, but it was a good.
We're going to say it.
Yeah, it was a good scenario for these clients, right? Excuse me. So basically, we did the Cypress 100. They were first-time home buyers. You know, we found them a house. We got it under contract, negotiated on a price. We got seller-paid closing costs, which covered all of their costs, right?
All of their closing costs.
All of their closing
meaning-
costs. So appraisal, title, everything.
Okay.
Borrowers did put down $2,000 earnest money. When we went to closing, they got that money back. Okay,
Amazing.
so they got that $2,000 back. Now here's the cool thing: that house appraised for $540,000. They bought that home for $500,000. So they're walking in, no money out of pocket,
Amazing.
100% financing.
Instant equity.
instant equity.
Instant equity.
Because-
and got their earnest money deposit
Back.
on the sale back.
Right. I mean, it's just because of the market right now, because they could afford to buy. They're in a good opportunity, and it worked out for their benefit. Now, it doesn't always happen that way.
Right.
But there are instances, and like the timing right now is everything.
And they happen to be locked in to a 30-year fixed mortgage. And what happens if, fingers crossed, interest rates come down to 4%?
We refinance them.
You refinance.
we refinance
Right?
them.
Like I tell people all the time, marry the house, date the rate. The rate is temporary. You could be in a home for 30 years and refinance that thing every 6 months if you really wanted to.
Yep.
Right? Does it cost money to refinance? Sometimes, right?
Yep.
Depending on
Situation.
the situation, right? But refinancing, if there's a substantial difference in interest rate, saves thousands of dollars every year in that homeowner's pocket, right? In payments and over the life of the loan, right? And so you can always refinance, but they think like, oh, I don't want to be stuck for 30 years at a
7%
7% rate, but they're not. And they don't understand that because
I'll tell your client, I'll say, don't get hung up on the rate.
yeah.
And there are clients out there, first time home buyers, I heard that you can buy down a rate. So with your question about what's included in your closing costs, you can definitely pay to buy down your interest rate, but I always tell people don't get too hung up on it. We'll give you the scenario, like here's what it'll cost you to buy the rate down this much, but this is when you'll break even. So if you think that you're not going to refinance within or sell your home within the next 5 years, like it's not going to be a good idea to pay thousands and thousands of dollars to lower your rate. So that's one of the things that could be a closing cost. You know, if your seller's willing to pay for you to help you get a lower interest rate, like in today's market, if Cherry can get your seller to pay some of your closing costs, yeah, that's going to help lower your payment. And she's going to help you save you money by not having to pay for that out of pocket. So I mean, there's things that those closing costs will definitely pay for.
Yeah.
And if it's
And
coming
that
out
will
of your
all go away when it shifts
Yep.
into a
Oh,
seller's
yeah.
market.
And that's not the sales side of us talking like now is the right time to buy. It is
no, it is
for
for-
real.
It is for me.
It's just
No,
there's
I'm just
opportunities
kidding.
out there.
No,
Basically,
yeah.
there's
Yeah.
opportunities.
But even
joking
to your
aside,
point, I think
yeah.
even when we saw that little dip, I had heard more of like multiple offers on houses. Going
Yeah.
Oh,
back.
absolutely.
It
There
was-
were 2 months where
Yeah.
we were seeing multiple offers
Yeah.
because everyone was like, wait, there's movement. We're going to go now. We're going to go now.
Yep.
And then all of a sudden it was like,
Yep.
crickets.
Right. First time home buyer, do you want to be competing with, 5 offers on the table, or do you want to be competing with 20 other buyers,
Yeah.
on the table? So right now is the time to buy, so that way you can get closing costs. You can not be out there with the 20 other buyers, because I feel like once it gets warmer,
Yeah.
I don't know about you guys, but that's when all of the buyers come out of the woodworks, and you don't want to be out there with all of them. So let's get it in now.
Yeah. And honestly, it makes a huge difference in a seller's mind when there are no offers on the table. They've been sitting because they're wanting to sell and there are less buyers in the market, even though it's low inventory in Utah, less qualified buyers in the higher interest rate, right? Or less willing buyers because they don't understand,
Right.
or they are not first time home buyers and their first home they have it at a 3% interest rate and they don't want to sell a 3% interest rate mortgage and then bump up to a 6. But that's another conversation. But the sellers then are presented with an offer that is asking for a little bit of help for them to get into the mortgage. And that's the only offer that they have. Don't you think that seller is going to do that if it's reasonable? And I mean, we're not saying, hey, we would like $100,000 towards closing costs, right? We're talking like 5, 10, right? There's a cap. We can't ask for a certain amount, actually. Most of the time, it's 3% of the purchase price, right? So if you're buying a $500,000 home, here's some math I can't do in my head, Anna. I'm gonna ask for $15,000 in closing costs paid for by the seller. That's the max, right? And just so you know, I also can't say, but we also want 5,000 credit towards the roof and 2,500 towards the hot water heater. It's 3% cap, right? But if they don't have any other offers and they're really wanting to sell, they're going to take that and help that first time home buyer get in.
Yeah.
Right.
Because the longer they sit in that house, they can't move on.
That's
as
right.
Well.
Yeah. Yeah. So all those things I think make such a big difference for buyers that they are not understanding that as the interest rates go down, they're going to miss those opportunities, right? And again, not from a sales pitch standpoint of let's go home shopping now, but from a reality standpoint of let's take advantage of both sides of the coin, because right now you can get those incentives and you can still take advantage of lower interest rates when they drop down. And on the backside, you're going to be so much better because as those interest rates go down and the home prices go up, now you're already in and you have equity.
Yep.
Right. And so the neighbor down the street has somebody who has sold for 50,000 higher than you bought, right? When the interest rates were high. I mean, and that's all relative too, right? My parents bought a home in the 80s in 18% interest. So
For $35,000.
yeah, that's true. It was not a $500,000 house at 18% interest. But if you don't think that like affected them, right? They made a lot less money also, right? Than we typically see in income now.
And everything you hear about back then, it was much harder to qualify for a mortgage than it is today as well.
Yeah. But typically, I mean, everybody thinks interest rates are so high, it's so high.
Yeah.
They're not actually historically.
They're not historically high. And I think to your point, people are worried about a payment. They really, truthfully, at the end of the day, it's what's my payment.
Right.
It's not really what my interest rate is or anything like that. It's what my payment is.
Right. Right. Yeah. And what you said earlier, Anna, there are things now that because of the way that the market is, there are incentives, not only the Cypress 100, but there are first-time home buyer grants that you can qualify for. It's free money, literally a grant. Like I apply for you, you get your name drawn out of a hat or not, right? But you're not having to pay for it. You don't have to pay it back. Those things are available for first-time home buyers or someone who now is reconsidered as a first-time home buyer because they haven't owned in the past 3 years, right? So just I think super great information to know. And I think the bottom line is have a conversation, right? Like call us, ask us all the questions. There are no dumb, no dumb questions.
This is a lot of information, that we're talking about and giving to first-time homebuyers. But just remember, we're here to hold your hand. Like it's okay to be overwhelmed. Yeah. It's a huge animal that you're taking on, but don't make it like that. Like we're here to help you, hold your hand and walk you through this process because it's not an easy one, but we can make it that way. Yeah. So just.
And I think like to your point there as well of one of the things I always hear is like my rent is $1,500, but now I'm going to a payment of $1,800. Right. But I think with that, how I always handled it is like, well, now you own it at this point. You're actually building more equity on the back end than what you realize as well.
Right.
Don't let that be your hurdle of it. Your rent's probably going to go up to $1,800 in a year anyway.
What?
So why not be ahead of it instead of behind it?
Your rent is not staying long term at $1,500, right? That landlord's going to raise
we all would
it
do
every year. Otherwise, we'd all be renting. But yes, it is right. It's going to go up, and also there's no security in that, right? Like the landlord could decide, I'm not actually going to renew your lease. So now you could be in a situation where every year you're having to look for a new place and you're at the mercy of getting in at a new place at whatever the market value is for rent
today.
Right?
So stressful. I've got some buyers right now that have been literally in the home buying market for 6 years. Like this is the longest pre-approval that I've ever had. And I've watched them see rates go down, buyer's market, seller's market, and they've just every time, we should have bought in the beginning. We should have bought in the beginning. I think now is the time. And if you keep holding back, you're just going to keep missing out on these opportunities to get seller paid closing costs. to get a lower interest rate, right? Because hey, rates might go up. We don't know. We don't have a crystal ball,
I wish I
but
did.
we hope,
Right.
we hope that rates. I mean, the trend is that rates are supposed to go down, right? We've got people like looking at that in the forecast, but and when but when that happens, we'll refinance at that time. It's okay. Don't be hung up on the rate. Don't be hung up on the cost. You know, let's just figure out what you can afford and get you where you need to be to get you a new house. So you're not renting. So you're not throwing money away for that.
Yeah.
Right.
Yeah. Yeah. I mean, I think it is like a no brainer to jump in now if you can, right? Because then you don't have those regrets, right? Yeah. And I just think knowledge is power, and we know that, and we live in such a full of knowledge world, and it's at our fingertips, right? Where we can Google anything or we can, ask any question. AI spits out all of this information within 10 seconds of us putting the question in our phone. But nothing is like having a live conversation with people who are in the industry every day, doing deals, helping people, having every situation be different and unique, and being able to cater it to the client in a very specific way, right? What do you as a client need? Oh, you have a lot of money in reserves that you'd like to put down, so this program is not what you need. Okay, well, let's pivot over here, right? Or refinancing a car so that they can get in, right? All of those things make a huge difference. And I think just whoever is on your team is so important, and getting rid of all the noise that is distracting you from making the decision and just taking the leap to do it.
I think that's why we all love to do what we do, because every client, every borrower is different.
Yep.
So you're not ever going to get the same borrower. And so we're here to be creative, to help you, like I said, hold your hand. And if it is like, hey, I've got money, but I have so many debts, or vice versa, like, let's figure it out. My credit's not there. It's okay. We'll figure it out. We've got options for you. We've got credit repairs.
Yeah, we can talk about how to get your credit from point A to point B, right?
Exactly.
You're not stuck at this credit score for the rest of your life, right? Let's give you some tips and tricks of how to do
So
it.
everybody's different. That's the point. So don't feel like you can't come to us. Like I feel like we need to encourage them just to come.
Yeah.
Because I feel like I said in the beginning, that's the hardest point, is for them to get to one of us.
Yeah.
To get Terry, I need to buy a house.
Right.
And then it's Terry's job. Hey, Anna, can you figure out how much they qualify for? And then I feel like sometimes they even get scared to do that point, to get to that point. Like,
And they'll say, can we just go look at houses first and then I get qualified? No, ma'am. No, sir. We're not doing that. I mean, could you imagine, right? I take you through a $750,000 house. You
your
fall
hopes
in
up.
love with it. You find out that even with all the incentives and everything else, your purchase power is 525,000. We're looking in very different neighborhoods. We're looking in very different types of housing.
Terry's looking out for your back too.
Yeah.
She wants to make sure you don't fall in love with a
Right.
$700,000 house
Right.
when you can afford. And that's something so crazy. I feel like when I help first-time homebuyers go through this process, I always ask them, hey, look, you qualify for a $3,000 proposed mortgage payment, but what do you want to budget for?
Yeah.
Because that is totally something different too.
Yes.
They have a conversation with their spouse or to themselves, like, this is how much I want to budget for. So I want to know stuff like that too. I was talking to a listing agent this morning, and she's like, hey, on your letter, you didn't put a pre-approval amount. And I said, that's because they are well qualified for more, but their budget is
where they want to be, so that they're comfortable.
Right.
And also,
Exactly.
in my first time homebuyer class that I teach, and I know you've heard me say this, Jeremiah, I tell every first time homebuyer, make a non-negotiable list, so that ahead of time, right? And then when you are done with that list, compare it to the list that the person that you're buying the house with, if there is a person you're buying the house with, compare it to their list. You'd be surprised what non-negotiables you have versus me, right? And I tell them, like, you need to be realistic. all of us would be like, you know what? I would love to live lakeside with a barndominium that can park 8 cars. Get real. Okay,
me
we're not
up.
buying this house. Okay, I know. I said that specifically to my
Sign me up.
So full of Chevelles and Camaros. Okay, that would be my dream.
Just
But-
needs a garage door
Yes.
big enough.
That's all I need. I don't need nothing else.
yeah yeah but seriously though, if your first time home that you're looking for is a 6,000 square foot 3-car garage on an acre lot, you are up in the night thinking that you are going to find that as a first time home buyer in your budget. That's not a first time home, right? A first time home is something that you put sweat equity into and you build equity over time. And then when you sell that house, you take that equity and you upgrade from there, right? And so having that realistic conversation, and I will be the bad guy every time, because it puts them in a more realistic mindset of, tell me what your actual non-negotiables are. Do you need your own separate office? Do you have any children that you need, them to share a room, not share a room? Do you not have any children? Do you live there by yourself? Are you living there with 8 of your cousins? I don't know what your situation is, but whatever it is, it needs to be practical for what you actually need. And then once you give me that price, we can go in and kind of figure out where we can get those non-negotiables. But my gosh, I'm not taking you home hunting without a dollar amount, right? Because it's just no good for anyone.
Anybody?
Yeah. Anything else you guys feel like are just amazing bullet points we need to spit at them? I feel like we've been frothing all this information,
Yeah.
I think it's been good, and I'm sure some of them are overwhelmed.
Don't worry, we're here
Yeah.
for you.
But
No worries.
our contact information, is attached with the podcast, and you can reach out at any point in time. But anything else you feel like we really need to hit on?
I think the biggest one is have fun with it. I
Yeah.
mean, it's a very stressful time, right? And I think we have all been there, but don't forget to have fun with it. Find something that you want and make it your own, and enjoy the experience of you got here somehow, right? So
Right.
don't forget to have fun with it.
Yeah. Yeah. It should be semi enjoyable, right? The title of the podcast: exciting, terrifying, and doable.
Yeah.
It's
Doable.
doable. Yes,
Yeah.
it's terrifying. And also, I always say, anything in life, when you're slightly more excited than scared, just jump. It'll be fine.
Take the chance. I can't tell you how many people I've sat down with and pre-approved that didn't think they could afford. But when you look at the big picture and look at everything, you're surprised. You're like, no, now's the time. Like, we've got to get you something.
Yeah.
Like, congratulations, you've done all the hard work.
Yes, and it's
Let's
fun.
get you there.
It is
Get you to
exciting.
the
Yeah.
finish line. Get you
Like-
to the finish line. That's the reward.
Yeah.
Because I
It's-
just helped some buyers just barely. And at the beginning of the pre-approval meeting, oh my gosh, they were
Sweating.
so stressed
Yep.
out.
Yep.
Reading in a paper bag.
So defensive about their credit.
Yep.
Like it's okay. I
So
had to
defensive.
remind
Yes,
them.
they do. I'm so sorry. We had this happen. This wasn't
Yeah,
my
yeah,
fault.
yeah.
Yes.
Like, it's
It's
fine.
okay.
And
It's
It's my
okay.
favorite of like I've
It's
seen
okay.
far worse.
Yeah. I mean,
Yeah. Oh yeah.
That's the best
Oh,
part.
Don't
exactly.
even like this
So-
isn't even on my radar.
When they went to closing, they were laughing about it because of how stressed out they were.
Yes.
They're like, we're so sorry. They were apologetic. And I was like, don't be sorry. That's totally normal.
And I get some stress on my side, but my side is for sure the fun side. I mean,
Yeah.
yes, we go through inspections, and there are definitely some terrifying ones. We're like, oh, we should rethink this a little bit. But it is so fun to take first-time home buyers
Oh.
through
Oh, it's-
homes. I unlock that door, and they get in a mode where they start imagining themselves in these spaces, and it is like watching a kid go into Disneyland and just like
Oh,
it's
yeah.
magical. And then when you give them those keys of their first home, there is no better feeling for me as an agent as giving those keys, because they are just like, oh, like they really are. It's almost like I cannot actually believe it. I know I was doing this,
surreal.
but I can't believe I actually did it. And
Yeah.
it's so rewarding
Totally.
and fulfilling for me.
It's like
You
my
just-
favorite closings to go to.
Yeah, absolutely.
Because it is, to your point of, like, I never thought I'd be able to do this.
yes.
yeah.
Being like, you actually took all the steps you needed to.
Yeah,
So,
it's-
Yes.
You've got all the hard work.
Bravo.
now make
Yeah.
the payment.
Yeah, remember your payment is due on the 1st, late after the 15th, and please don't ever let it go past the 30th.
Here's your Minky. That's all we got.
Yes, that's right. Yes. So take the plunge, even though you're scared and even though you have 1,000 questions, call us. We'll help you through it. It's so fun. It's so rewarding. We're here to help you every step of the way.
We really are fun.
Yes. Absolutely. We're fun.
You got to have fun with it. That's for
Absolutely.
sure.
Yes. Yes, for sure. Okay. Well, thanks for being here, you guys. You guys are awesome.
Thanks for having us, Terry.
Yes.
thank
Thanks
you.
for
Yeah,
watching,
thank you.
For the
listening, and
opportunity.
Yeah.
call us with any questions and we will get you home.
We will get you home. I love that.
Hey, I like it.
I know.
That's right. We hope you enjoyed listening to this episode of the X Factor Real Estate Podcast. Thanks so much for being here and listening. It's been a pleasure making this podcast for you. And as always, if you have any questions, don't hesitate to reach out to us. Drop something in the chat. Let us know what you're interested in hearing about in the real estate world. I'm Terry Hudson, and I hope you join us for our next episode.